Welcome. Today we're talking with Craig Scheef, founder, chairman, and CEO of Texas Security Bank. Craig, welcome and thank you for joining us at today's Banker Digest.
Thank you for having me, Larry.
Great. All right, well, let's get started, Craig. Maybe we could start with what's the current state? What are the issues and concerns in your part of the country?
Yeah, so in Texas, I think, particularly North Texas, I think we're blessed by a pretty good economy and significant immigration. However, we're not immune from a lot of factors that are affecting banks nationally. The biggest being, as most people are aware, is the run up in interest rates. We've had, I don't know, 11 Fed fund hikes in the last 17 months. So the pace and the magnitude of the increase is really something we haven't seen in 50 years. So that puts a lot of pressure on banks' net interest margin as banks have assets, earning assets that are at fixed rates, whether it's their bond portfolio or mortgages on businesses. And so that is compressed margin. And it's really become significant competition for deposits. And so money market rates that we pay 15 months ago, we were paying maybe 50 basis points. Today, you can find money market rates at 5.5%. So deposits are king, particularly checking deposits, which are non-interest bearing accounts. And along with that, the market overall, the publicly traded markets, which influence the franchise value of our bank, multiples are very, very low, lower than they've been in quite some time. And that's because institutional investors and other banks that are potential acquirers are concerned about another shoe to drop, and that would be credit quality. So if you have a slowdown in the economy, which impacts the cash flow available to service debt on loans, occurring at the same time that you have a significant increase in debt service, there are probably some loans that are out there, particularly in certain asset classes that were negatively and continue to be negatively affected by the COVID shutdown, those being office and hospitality. We're probably not going to see an improvement in bank valuations until institutional investors believe we're out of the woods from a credit quality standpoint.
All right. Great. Thank you. So building on that a little bit, what are some of the issues that you see will be affecting Texas Security Bank's strategic planning cycle as it comes up this year?
Well, what I just talked about kind of informs what our strategic objectives really need to be. And it is around the area of deposit generation. In our particular case, we're a commercial bank, we're branch light. So we don't have a huge branch network, which really helps us from a cost standpoint, but it puts an added burden on our bankers to be responsible for both sides of the balance sheet. Assets in terms of loans, but first and foremost, it has to be deposits and keeping our deposit growth out in front of our loan growth. And so to do that, we need to we invest a lot in our digital experience for our customers, our online banking experience, payments and collection and reporting and security. And so making sure our bankers are well versed on the feature functionality of that platform, and they really understand how the treasury operations of one of our business owners work, so that they can come in with solutions to be able to assess their current needs and where there might be areas of improvement, not only in terms of cost, but obviously in terms of efficiency.
Great. Thank you, Craig. So without giving away any secrets, what are Texas Security Bank's major focus areas?
So for us, it's scalability, and what kind of dovetails into scalability is the quality of each one of our team members that we have, making sure we're hiring quality people, making sure that we're compensating and retaining and developing our A and B players. Um, and so far, for part of that, this was a strategic objective that we actually began to implement in 2022, and that's building out a learning management system. And we continue to build that out so that each one of our team members who have a role and responsibility, as well as the organization having certain core processes, that each one of our team members have learning management units associated with their role and responsibility and our core processes. And we just think that as you get bigger, making sure you're able to maintain true north in terms of your processes and your training, and it's a very efficient way to keep everybody on track. Everybody knows their roles and responsibility, and there's plenty of learning content to make sure that processes are followed. So
Great,
that's a big part of our strategic plan, which has gone back a couple of years, but that's a significant implementation, and so it's taken a couple of years to get it built out.
great. Thank you. So, so you mentioned this earlier a little bit. Maybe we can delve into it a little more. Greg, what is Texas Security Bank's approach to the great digital transformation?
Yeah. So there's actually a number of things that we do. We have a board technology committee, and we have a management technology committee. And obviously, with pretty much any bank organization, you have a limited amount of resources. And so being able to stay up to date on trends and emerging technologies that could provide solutions to our customers and to our team members is part of the charter of those two committees. And so we work hard to stay abreast of that. And when we decide to implement a technology that has a cost to it, first of all, we have to look at it against the backdrop of our existing technology framework,
Right.
and make sure that we're not implementing a technology or a solution that we could find in our existing.
Mm-hmm.
Um, but we really approach it on having kind of three legs to the stool, so to speak. Offensively, which is customer facing, and speed and usability and accuracy and safety for our customers' online banking experience. So, and with the intent of generating additional revenues through customer acquisition. So
Right.
offensive, we look at it operationally. So when we look at our existing organization and all the processes and technologies, a big part of what our technology initiative is speed. All right, because the idea is if you can conduct a transaction or an operation or a process faster, that enables you to scale without necessarily having a parallel increase in your costs. So keeping
Right.
costs flat while raising revenues is obviously going to have an impact on earnings per share. And then the third, which most people think about from a technology standpoint, is defensive. So cybersecurity and phishing, all this stuff
Mm-hmm.
that it's not just our organization, but we have all these business owner customers in keeping their technology hygiene up, because it's not just us, it's people breaching our customers that we have to be very sensitive to. So defensive, not only for our organization, but defensive for our stakeholders, our customers.
Great, great. Love the three-legged approach there. Thank you. So, kind of maybe along the same lines there, with the pace of today's business environment, which you've already spoken to, how does the typical regulated, cautious banker position themselves to pivot to meet customers' requirements?
That is one of the biggest challenges I think facing banks, because banks have historically been viewed as very um, uh, conservative, cautious, staid, so to speak. And the new reality of banking is change management. And I think a big part of change management is having margin built into not just your balance sheet through capital and liquidity, but margin built into your workforce. If everybody's running at 100% capacity, there's not a lot of margin to pivot. So building margin into your operations,
Right.
and it's also a state of mind, has to be a state of mind for each of our team members, that my role and responsibility today could be very different 6 months from now, depending upon the change of an environment. And change is really tough, because people seek comfort. They like routine. And we went through this quite a bit, with paycheck protection. We had to institutionalize our
Right.
underwriting process and our application process and our funding process, in order to deliver uh, um, like we did. And so a big part is just a mindset in coaching your people. This is a change. There will be additional changes. The basis under which we compete with other banks is going to be our ability to handle change. And on an individual basis, continual learning, continual adaptation, continual being, frankly, a little bit of getting comfortable being uncomfortable. And that's what change management is. And that's hard for an industry where that has not been the norm. But I do think that's the new reality, and it's coming to us at an ever increasing pace.
Yep. Yep. Thank you. Thank you, Craig. Great insights. So, Craig, thank you for spending time with today's Banker Digest today and helping us better understand how banks can navigate the interest rate changes, and also navigate the changes in customer requirements, as well as the digital transformation to continue to serve their local communities. So, again, Craig, thank you very much.
Thank you, Larry. I enjoyed it.
Good. In closing, thank you for joining today's Banker Digest. If you have additional questions for Craig, please see the link in his bio.